Alright guys, it's time to get the rockin' trades on tonight. Let's go ahead and take a look at what we've got. It's Tuesday, March 9th, and it's late at night. It's 11:30, and I'm just thinking about what I'm going to do for the trading day tomorrow. I want to start out with the chart of the E-mini S&P futures, just like we always do, and get a feel for where we are at. The market is traded up into this resistance zone. Now, we see a pretty solid move up, but then the market gave up the gains at the end and it closed down. The thing I notice about this is the volume is really low. Now, with that volume that low, that really tells me there's not a lot of strength in this move. And we would probably suspect the market to either continue pressuring this, it may run sideways, it may drop down. Now, let me go ahead and activate my drawing tool real quick and talk to you about the probability of a cup and handle breakout. This is the cup, and we expect the market to kind of drop back or run sideways and then power on through eventually. Once that breakout occurs, then the question is how high will the market run? Let's go ahead and remove that and drop this out into a weekly time frame and talk about that. If the market breaks up, you see I've got a line drawn up here. What I think is we're going to break up and run into this old support resistance zone, which puts you at about 1225. Now, I would watch round numbers, 1220, 1225, so on and so forth. 1200 is a big number. Let's not forget that. I'm also going to show you a Fibonacci retracement off of the entire rundown, and where we've been powering through is that 618. So we've been trading at 61.8%, and let me go and squeeze this in. That's just off of our third wave. Let me drag it out to the next level here, and what you'll notice is that our 618 level coincides with that support resistance zone. So 61.8% retracement. Again, we're watching 1220 to 1225-ish. So let's go ahead and review what we talked about on some of our other trades. We had the trading ideas. We had the bull put spread on Diamond Offshore, and if you remember, this was that symmetrical triangle slowing momentum. We thought it was going to be a W, and now it's starting to look more like a W again. It has broken up. This is a great sign for our trade, really good sign. And remember, in the near term, when the symmetrical triangle breaks, what you expect is that the breakout will go as high, when you project it out, we expect that to run out towards 95. So that is looking great, no problems there. Let's go ahead and review that trade we did on the DIG on Monday. And this broke out. So what we have here is we broke above resistance, and it came down and retested the old resistance, acting as support now, and we're seeing some strong buying in here. And this particular position thus far is still break even. And if you remember, this was the 100 shares of stock purchased at $34.68, and the two out of the money options at $38 per share. So the $38 contracts for June, they were paid $1.63 for each. And at this point in time, the trade is still flat. It is still at zero. Now, you remember, let me grab the regular chart of the DIG and show you a couple things about it. One, the volume is picking up a little bit. Two, let me go add the average true range, and all we need is one good day up. This moves about $1 a day, 98 cents to $1 a day, and one good day up will take you from 34, 35 up towards 36. Now, that being said, come back and review here. At 36, let me show you the position graph and make sure you understand this. A breakout to 36, if you use your crosshair here, you can see, if you look down, I know that's kind of hard to see, that says $237 gain. So if it breaks out one average true range towards 36, I need $1.63, and as soon as I get $1.63 or $163 in profits, I am going to get rid of the stock, release my capital to trade something else, and I would collapse one of those options, and what I'm left with again is one option that is completely paid for at $0. I don't have any stock left over. And what I'm left with is an unlimited gain profile. Now, let me go ahead and hide the position here and really show you what we would expect. Let me bring the chart in. If this broke back out towards resistance at 39, you would be sitting on a little gain. Now, if this ran out towards 45 or 50, you have unlimited gain potential, and you have over 100 days for it to get there. Now, this is a seasonal play. Remember, we think that oil runs going into the summertime. So the springtime, we expect oil to run. Now, that being said, let's take a look at a new trading idea. This is a stock that came up in one of the scans I ran, and it's a bullish trade. This is a bullish retracement. And what we have is a higher high, higher low, higher high. We see it pulling down higher low. We expect the old resistance zone here to act as new support. So let me grab my drawing tools again and make sure you understand this. This has an inverted head and shoulders reversal pattern right here. And the breakout, it really signals the change in trend. We know that's official. Now, let me go ahead and bring back up the line tool here and say that we are kind of trading at the trend zone. So at the trend zone, we're expecting this to maybe run up. Now, my expectation of gold is that it's going to be bullish going forward. And the reason is the U.S. dollar is going to drop. And the reason that drop comes in is because of the inflationary pressures. They've printed too much money. And we will continue to see the value of gold rise as the dollar strength continues to drop. Now, the idea behind this is an exchange-traded note, which is similar to an exchange-traded fund. This is by Deutsche Bank, so it basically trades like a stock, and so you can buy and sell this. There are no options on this particular instrument, but it's only $27.52. And what this is it's the PowerShares Deutsche Bank Gold. It's a double long ETF, so it double leverages what happens on the gold index. And this is a way for a person who doesn't have a ton of money to come in and invest in gold. It's a paper asset on gold, so it's not the actual gold itself, but it's a paper asset based on gold. And the pattern's pretty. We've got the buy candle in here, and what you would need to buy is a signal confirmation. We go put in a buy order above the candlestick high. I would put in a stop loss below the candlestick low. If I wanted to give it some wiggle room, I'll drop the stop loss back maybe below the previous pivot back here and give it plenty of room to run. And again, I would probably consider this more of a position trade rather than just a swing trade. Now, the swings are nice. This has a nice little $3 movement to it, maybe $4. But the idea here is that I think we get a long-term position, and my goal is this. It's real simple. If I get into this, and this particular security starts running up, and we see upward movement in price, the minute that breaks out, my expectation is that it's going to run out, retrace. Old resistance here would probably act as new support. The trend zone probably holds, and then it takes off to the races again. Now, my idea is once that has occurred, my stop loss is going to come up to what I purchased that for. So we would be looking to purchase it right here near 27.83 or so, and I'd need a couple extra cents in there to cover the cost of my commissions. Now, my commissions are $10 round trip, and if I did 100 shares, I would need 10 cents to cover that. Now, if I did 500 shares, that would be a different story. Again, now this is not a suggestion to buy or sell the stock. I just wanted you to understand it conceptually. The goal here is to get to break even on the trade as soon as possible and then let it ride and trail your stop loss up behind it. Make sure you lock in a profit. I hope you have found this informative, and I will see you tomorrow for another market update. Thanks, guys.